We're sitting here at the beginning of June 2023 and interest rates are starting to creep back up. You would think that this would be putting downward pressure on prices here in the Bay Area, but prices continue to climb up. How could this be? Coming up on this Silicon Valley Snapshot. For those of you who are new to the channel, my name is Danny Gould. I'm the CEO of the Selling Silicon Valley Group, a group of realtors here in the San Francisco Bay Area. After graduating from Stanford University in 2014, I've dedicated the last 8 years of my life and counting to serving families here in the San Francisco Bay Area, help buy and sell homes. Sold well over $200 million worth of real estate in that time. And check us out on Google, over 255 star reviews and all that's good stuff. But let's get into the data because that's what we came here for. And first things first, late last night, the Senate passed the bill to raise the debt ceiling, which is great news for both home buyers and sellers here in the area. No one needed that turmoil to kind of hit the fan at this juncture with all of the volatility and uncertainty that's already in the marketplace right now. So that is a good piece of news. The question on everyone's mind, though, is we've seen interest rates start to creep up over the last few weeks. And you would think that this would put downward pressures on prices. Downward pressure. But that is simply not the case. And I'm going to present to you some data that could explain exactly why that's happening. But before we get into that data, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to assist you in your home buying decision making, you can text the word data plus the area or the city or the zip code that you're looking in, and we will get that information sent straight to your inbox. And if you're a home seller in today's marketplace and you're trying to figure out, is now the right time for me to sell my home? And if I do sell my house, what should I price it for? All of those questions will be answered when you text the word data plus your property address to the number down below. There are a lot of reasons why it would be reasonable to expect that prices should be going down right now in the San Francisco Bay Area, but that is simply not the case. Now, if we look at year over year numbers, prices are absolutely going down. And if you've watched these videos, if you've been watching these videos for the last few months, I've shown you a few months ago where in some neighborhoods year over year, we are seeing prices, at least in March, we were seeing prices down, depending on the neighborhood, 10, 15, 20, 25%. That is a massive discount, especially when you consider that the Great Recession in 2008, 2009, we were seeing housing prices down in like the 20 to 30% range. And so in some areas, we were experiencing price depreciation similar to that which we experienced back in 2008, 2009, which is just crazy to think about. The interesting part is how quickly we've been able to recover from that, even though interest rates are a lot higher than the rates were when we experienced the run up between 2013 to 2022. So the rates have been historically over the last 10 years a lot lower than they are right now when we saw that run up in prices. And so when the interest rates increased by 2, 3%, 4%, it was reasonable to expect that housing prices were to come down. But now housing prices are rebounding and rebounding rather quickly despite the increase in rates. And it's perfectly reasonable to ask, like, why is this happening? Like, how could this possibly be happening? And the answer has nothing to do with the rates. The answer has nothing to do with demand at all. The answer has everything to do with inventory levels. So I went back into the archives and drummed up some data reports in 2020 because during the beginning of the COVID-19 pandemic, we experienced very tight inventory levels. And if you recall, coming out of quarantine, coming out of shelter in place, and even before we came out of quarantine and before we came out of all of that, the inventory levels, because they were so low and the demand was so suppressed over even like that 45-day period when people were like at home and like wearing like masks and sanitizing and toilet paper and all that stuff. You remember that? That was crazy. During all that time, we saw a massive run up in prices because of the pent up demand and the low inventory levels. That was literally the headline, is that inventory levels are very low right now. Oh, and by the way, there's pent up demand because the rates are really good and people need to move and they're only going to put their life on hold for so long, even despite the pandemic. This graph right here that you're seeing is Santa Clara County over the last 3 years, inventory levels, sales, and pending activity. Now, the light green line is for sale or active inventory. And when you look at 2020, there were 1,300 total units on the market in Santa Clara County. That was in April of 2020, right at the beginning of COVID-19. Now flash forward to today, April 2020, which by the way, this data lags a little bit. So we're at the beginning of June right now. We will get the May numbers in about a week or so, the full numbers, but this illustrates the point perfectly. Look at April of 2020, right at the beginning of shelter in place. A bunch of people pulled their homes off the market. So there was tighter inventory than normal, suppressed inventory levels. We are down nearly 40% in terms of active inventory in Santa Clara County from what was already a very, very tight market. When you eliminate that much inventory, what's going to happen to prices? To put it in perspective, every time that interest rates go up 1 percentage point, that is usually a increase in 10% in terms of your total payments. And so one could imagine and assume that every couple percentage points that interest rates go up, you're eliminating about 10% of the market. You're not going to eliminate 10% of the market by increasing rates 10% or 1%. It's not linear like that. But one could assume that like, okay, 3 percentage points, you're going to see maybe 15% of the buyers go away. Some people are going to get priced out or priced down into a different tier of housing. And by the way, as far as I know, there is no concrete data. It would be great data to have, but I don't have any data to support exactly like this increase in rate decreases the amount of buyers, amount of available buyers by this amount. I think that varies depending on area, etc. So really hard to have concrete numbers there. But rising rates absolutely decrease the amount of available buyers out there. It just does. But the rates clearly haven't eliminated over 40% of the buyer pool. And that's the punchline, is that as hot as the market was back then, we are seeing multiple offer situations. My team member just wrote an offer last week on a property where there were 15 offers on a property that was like in the almost $2 million range. Now, back at the beginning of 2022, we were seeing headlines of like 30, 40, 50 offers. We're not there right now. We're somewhere in the middle. This market is somewhere in the healthy middle of like a ridiculously white hot market and a cold market. And it all has to do with inventory levels. And by the way, Santa Clara County is not the only county that is experiencing this. We talk about the 4 major counties in the San Francisco Bay Area, aside from San Francisco County, which are Santa Clara County, San Mateo County, Alameda, and Contra Costa. We are seeing a very similar narrative in all 4 counties. In San Mateo County, we're seeing a far less exaggerated version of this, where back at the beginning of the COVID-19 pandemic in April of 2020, we had roughly 525 homes active on the market. And right now we have about 450. So that is only about a 15% decrease in inventory levels, but still that is very tight inventory. It is worth noting that in San Mateo County, we saw lower inventory levels at this same time last year. So in San Mateo County, we're not seeing as historically low an inventory shortage as we are seeing, say, in Santa Clara County for this same time. Looking at Contra Costa County, we see a very similar situation in Contra Costa as we do in Santa Clara County, where back in April of 2020, we had 1,200 homes active on the market. And right now, in April of 2023, we have 700 homes. So that is a over 40% decrease in inventory levels in Contra Costa County. This would explain why Santa Clara County and Contra Costa County are way hotter in terms of activity levels than we are seeing in San Mateo County right now. And then finally, in Alameda County, we have 675 homes active on the market right now in April. And then going back 3 years at the beginning of COVID-19, there were 825 homes active on the market. So that is a decrease of nearly 20%. So somewhere in the middle between San Mateo County and then the white hot, crazy, low inventory nature of Contra Costa and Santa Clara County. Bottom line is that these low inventory levels are driving the market right now. And this is the story. As much emphasis as we're going to place on everything else right now, until this changes, the market isn't really going to change. And the question becomes like, A, why is this happening? And B, when will it change? Well, the first question is, why is this happening? And if you've watched previous videos of mine before, you'll know that I've given many reasons as to why we've seen low inventory levels here in the past, because as low as they are right now, they've been low for quite some time. And the main driver behind this is how much homes have appreciated over the last 20, 30 years here in the Bay Area. And a lot of Bay Area natives, a lot of people who have owned their homes for a long period of time, have no reason to move. The individuals that would normally downsize, who have lived in the area for a long time and just need the smaller space right now, the home that they would be buying to downsize to would be more expensive than the one that they're living in right now. And so like, it makes no sense for them to do that. Why am I going to liquidate this asset and then pay more money for that home than the one that I'm currently living in, or the amount that I currently owe on the one that I'm living in? And that's really the bottom line, is that financially it makes very little sense for people who would be typical downsizer. And that is a big if you look at other markets around the country, that is a big portion of the selling population are downsizers. That population has been practically eliminated, because if the kids and the grandkids are still in the area and you've got roots here and you've got reasons to stay in the Bay Area, you're not going to move. You're not going to sell that house. And so that's why in a lot of like the dream neighborhood areas, you're seeing turnover rates, meaning like the number of homes that sell every single year is like at 2% or like 3%. The only reasons to sell at this point are like death, divorce, and like maybe disease at this point. The rest of the population is staying put in their homes. And that is one of the main drivers behind inventory levels being as low as they are. Also, and this is just some food for thought here, if you are a potential seller and you saw what homes were selling for about a year and a half ago, and you see what your home is going to sell for right now, there's no reason that you would sell. And especially if you're sitting on a home with tons of equity in it, financially, there's no duress, there's no reason to sell it. It's like, oh, we'll just wait for the market to rebound. So that leads me to the, when will we see inventory levels loosen up a little bit? Well, we're already seeing prices come back up to where they were before. Now, they're not there yet. We still have quite a ways to go, but over the next 6, 12, 18 months, however long it takes for prices to kind of get back to that point, once we see prices get near or at that level of where they were back at the beginning of 2022, I think that's when you're going to see some of these like on the fence sellers, people that they have a reason to move. It's like, hey, I'd like to get over to Vegas, or I'd like to get over to Arizona, or I'd like to get over to Florida, or wherever the family is, or wherever that next chapter of life is. Whenever those sellers that would like to but don't have to move see their asset reaching the prices that they could get before, I think that's when you're going to see some people come off the fence. But for buyers, the question is like, why are we going to wait for that? Because that could be a long time from now. And if you wait for that to happen, then what you're essentially doing is waiting for the market to appreciate. You're just waiting for homes to get more expensive. Now, the counterpoint to that, or the counter argument, is like, well, prices are going to come down again. Well, okay, prices could come down again. I'm not saying that they won't, but there would have to be a lot of bad things happen to counterbalance the extremely low inventory levels that we're facing right now. Too many what ifs for us to get into in this video, although I'd love to hear your thoughts in the comments. But the main point here is that with inventory levels being as low as they are right now, that is going to counterbalance a lot of negative effects that the economy and all these other things are throwing at the Bay Area housing market. And so I think that you're going to see a steady climb back up to what was the perceived price ceiling back at the beginning of 2022. And once we get close to that, then we might see the market balance out a little bit more, sellers deciding to get off the fence and actually sell their house because they can finally get what they were hoping to get back at the beginning of 22. If you made it this far in the video and you're not yet subscribed, what are you waiting for? Click the subscribe button, hit the notification bell, and give us a thumbs up while you're at it to get notified every single time I post a new one of these. You can count on me to keep it real and bring you the real data, not the fake news stuff, but the real live data pulled directly from the multiple listing service every time you watch one of these Silicon Valley snapshots. That's all I got for you in this episode. This is Danny Gould, everyone. I'm selling Silicon Valley, and I will catch all of you in the next Silicon Valley Snapshot.